Hi, this is Joe Paulson with AgView Pitch. I got Pete Meyer here to kind of go over today's report. How's things going today, Pete?
Good, Pete. Good, Pete. Hello. Good, Joe. I was talking to myself there, but then again, after a report like today, I do have a tendency to talk to myself. So, how are things in, where are you? Genoa, Illinois, right?
Yep, yep.
There you
Just
go.
outside of Chicago. Things are
There you go.
wet here today. How about New Jersey?
It's a little bit dry, but, it's, yeah, wet. Wet seems to be what's happening these days in the belt. So, well, at least not as bad by you as far as, southern Minnesota, northern Iowa, along the Missouri River to Mississippi. That's a bit of a mess, but
Complete
we'll see
mess.
how it goes. Yep.
So, what are your thoughts on today's report here? Bloodbath.
Um, yeah, I guess there's another word I would use there, but I'll stay away since it's a bit of a mixed company audience. So, you know, I think that it's interesting to me, Joe, because like, and this is going to sound self-serving, but it's really not. So let me explain. We would enter, the average estimate, the average analyst was thinking 90.3 million acres of corn after 90 million in the prospective plantings report, and 86.7 for soybeans. Our group, I mean, we were out there at 91, 91 and a half, and 86 to 86 and a half. So we were a little bit low in the beans and a little bit high in the beans, a little bit low in the corn. But a lot of guys were thinking, or I saw a lot of analysis talking about 88 million corn and much higher soybean numbers. And I don't know how it is with you out there in Genoa, but when I talk to guys, our business is almost totally based in Iowa. We have an office in Waterloo and an office in Dunlop. And you talk to Iowa farmers, they're losing money on beans, some $50, $100 an acre, some $150 an acre. And, when you start to go through this process, I think sometimes the analysts kind of lose sense of that. I mean, everybody said, oh, geez, we had late planting. Everybody switched to beans. Why would you switch to beans if you could get corn in? Now, these aren't final numbers, Joe, and I, I totally get that, right? We're going to have some flooding that's going to take some of these out. We're going to have some prevent plant that'll take some of these acres out. But in the long run, I think the market seemed miffed that there was that much more corn planted than soybeans. And to us, economically, I mean, like I said, I don't know. Are your margins negative for soybeans at current prices?
You strip out the potential margin protection
Yeah,
indemnity, and it absolutely is. We are way into the red. You know,
right. And then the thought process there is okay. And I saw December, that spread traded out to like 45 cents today. And when you think about that, you say, okay, well, the market's telling you they're not going to plant many corn acres next year in 2025. But farmers that we talk to, I mean, they're already reducing their soybean acres for 25, given how low the margins are. So I don't know, but at the end of the day, the average analyst was looking for 90.4 and we got 91.5. Okay. In corn, that's 1.1 million above where everybody thought it was going to be. And in beans, about 600,000 below. The wheat acres were a little bit low. Spring wheat acres were right in line. Durum, yada, yada. Cotton, a little bit higher. Well, cotton actually was a million higher than expected. I think the problem is that I've not been able to talk to Nash yet today, Joe. But I think the reason for that is because the report was delayed. Their website crashed and everybody's yelling and screaming, jumping up and down. How come? Who got the numbers? The usual. Oh, the funds got the numbers first. Everybody. But from what I understand, it was a blanket kind of miss. So the participation rate in the prospective plannings report was under 45%. Now, what do I mean by participation rate? Less than 45% of the surveys that were sent out in March were returned. NASS will tell you they hate the prospective plannings report because it's so inaccurate. And yet, year after year after year, we start to get finger pointing at the acreage report, say, oh, where they find all those acres from March? They don't. And I know the guys at NASS, and they're decent people, but they're statisticians, so they live in a black and white world. If you don't give them enough data, they don't want to fill in the blanks, but that's exactly what they had to do in March. So, yeah, it is what it is at this point. But Joe, the huge surprise, and it was even a surprise to us, was the stocks report. And usually the stocks report, this is the third quarter for corn and soybeans as far as stocks report is concerned. It's the last quarter for wheat. But when we were at Chris Barron's thing in Arizona in January, my partner Jared Creed and I gave a talk about, just the market and the market outlook. But we were not the only ones to give an outlook like that, an outlook talk like that. By and large, every speaker, maybe 3 or 4 of us, said the farmer was way undersold as far as old crop corn is going to be. And these numbers prove that that's absolutely the case. And now I'm sure that with December corn trading around 420, how undersold are they going to be in new crop as well? So let's talk about where the numbers are. So the average estimate going into the quarterly stocks report for corn stocks was about 4.8, 4.9 billion bushels. That would have been 800 million above last year. Came out at 5 billion bushels. Now, okay, 5 billion bushels, 900 million above last year, 120, 130, let's say, above where the analysts thought it was going to be. Here's the problem: 3 billion bushels are still in the farmer's hands.
I can believe it.
That's an enormous number. So last year, 55% of the June stocks were in the farmer's hand. This year, 61%. But we also had a bigger crop. So the numbers really start to jump. Now you're talking about 900 million bushels. And like you said, Joe, you can believe it. I can believe it. You talk to these guys, they're frozen in space. Whatever else is going on, unless they have margin protection or some of this other stuff. But now what happens is that, and depending on where you're located in the state, you're going to start to get this storage fees, right? 8 cents a bushel, 7 cents a bushel. So my partner Jared Creed refers to this as the second harvest during July, and this is kind of scary. I don't really know what else to say about it. We started talking about the rain in Illinois, and we haven't had a weather scare this year yet. Maybe we'll get one, but who's to say? Now we have 91.5 million acres, which we're going to see in the July WASDE. They are not going to come off a trend based on the weather. We are literally going to have to wait until September for a production change, unless the weather turns very quickly after the July WASDE and they do something in August. But typically, we're going to have to wait till September. So now we're stuck with these numbers. But the old crop, what July beans traded down to 390. Set beans traded down to 399.5. I mean, what are you going to do with that? I don't really know what to do with that. So soybean numbers, they're expecting 962 million in the quarterly stock report, got 969. That's a non-event. Still higher than last year, but so be it. And as far as the wheat is concerned, the last WASDE showed the carryout at 684, 685, and that number came out at 702. And the reason I referred to the last WASDE is because this technically should have been the end of the marketing year. So let me read some of these statistics real quick, Joe. So corn stored in all positions, total of 5 billion. I said it's up 22% from last year. We did have a bigger crop last year. Of the total stocks, 3 billion stored in farms, up 37% from a year earlier. Off farm stocks, first day with the new teeth, Joe. Sorry about that. 1.97 billion bushels are only up 4%. And the March-May disappearance was 3.36, and that's in line with what it was last year. Soybeans stored in all positions, 970. It's up 22% from last year. On-farm totaled 466. That's up 44% from last year. Off-farm at 504. That's up 6%. So we have higher stocks, and no matter which main crop you look at, corn and soybeans, it still remains in the hand of the farmers.
I can completely believe it. I've talked to quite a few different elevators in my neck of the woods, and the amount of farmer-owned corn that that is sitting in those elevators, paying commercial storage on it, is just staggering. I just, we're talking just here in, like a 20-mile radius. There's 3-4 million bushels of corn that's owned by farmers just sitting in the elevator, and they're starting to talk about where they're going to put ground piles this fall because, around here, we have a really good crop coming on yet. And, where's it all going to go?
Well, yeah, oh, wait, here's Lance Honig now. Let's see what the participation rate was in the acreage report. Oh, boy. The acreage report had only 40% of those surveyed return the report. But actually that's not too bad as compared to last year. I think last year was about the same number. I know the prospective plannings report number was down, but here we are again. Lance, God bless him. I don't know why he returns my text in a timely manner, but so be it, Joe. Sometimes you can fool these people, but he's a nice guy. So 40%, not great. Still leaves a lot of, and now we're left looking for the FSA data in August and September to really get a sense of it. And we'll also get a sense. But back to the stocks thing, we hear about, especially out west, it looks like more in the east. I actually, if you excuse me looking at my phone real quick here, I actually did some math on it and I posted it. So Illinois, you guys have 185 million more bushels of corn than you did last year on farm. Indiana plus 45 million, Ohio plus 25 million. So Iowa's plus 150 million, Nebraska plus 20 million, South Dakota plus 75 million bushels. That's 50% higher than what the number was last year. But by and large, Joe, you guys are the winner. 185 million more bushels than you had last year in storage. And when does your DP start to kick in here? Mid-July, end of July, 1st of July?
Yeah. I can't.
8 cents a bushel?
Yeah.
Something like that?
Yep.
I'm sorry. I don't mean to laugh about it because this is a serious situation. But yeah, if you didn't have margin protection, it's going to be a tough summer because the market is starving for inputs. And like I said, the only input we're going to get now is going to be maybe the August, maybe the September WASDE, maybe if we see some change in the yield. But everything in the East looks awfully good at the moment. Yeah, it got planted late. I was through Indiana a few weeks ago, through your state of Illinois a few weeks ago, and looks fine. Iowa, Western Iowa, the place that, the spot that was under drought for years, now that looks fine. Okay, these poor river bottom farmers are going to get screwed here, right? That's going to be the end of that. But, there are some unbelievable numbers being thrown out there as well by analytics groups. We lost 1 million acres of corn. We lost it. If you want to quantify that at the moment because you have data that shows exactly how many acres there are of river bottom corn along the Missouri River, you're way better an analyst than I am because I'm not even going to go there.
I do know that there are some major problems. I've been talking to a few different profit manager clients, Wisconsin, Minnesota, North Dakota, and they're dying. Just stuff looks really, really tough. Some prevent plant, but if there's other parts of the world that are killing it, my grandfather always used to say, an average was 1 foot in scalding hot water and 1 foot in ice cold water. And that was an average.
Yeah.
So, there's the have-nots.
Yeah, I think the East will be fine, but yeah, certainly I talked to a friend of mine who farms in southwest Minnesota, and he says he's currently had his agronomist go out and look and take pictures. He's a fairly large size farm, about 8 or 10,000 acres. And he said he's got maybe 20% good to excellent, 20% lost, and 60% that looks like dog. You know what? So there you are. Right? How do you average that out? You can't.
No.
And the river bottom guys, yeah. I have another friend of mine just east of Omaha there around Council Bluffs. He lost 2,500, 3,000 acres of corn that looked really good just 2 weeks ago. It's awful. So, but again, does the market care, Joe? And the market doesn't care. I get this question way before the report. Why are the funds getting short? And I say this all the time, Joe. The funds are short because it's the path of least resistance. They know, they're not stupid. They see the trend. Trend's been lower now for quite a while. We had a weather scare, a bit of a weather scare about 2 weeks ago. Looked like it was going to be hot and then it was going to be dry. Well, that heat kind of compressed itself, wasn't as widespread as we thought. Okay, that's fine. But also, I mean, they, you know, they know what's going on. They know that the farmers have 900 million bushels, or as of the last stocks report, had 900 million bushels more in their hands than they did last year at this time.
They're
And
doing their job.
yeah, right.
They
Now, when
smell
I talk
blood
to
and water.
funds, exactly right. And when I talk to now, maybe we got some covering today. I mean, 412. I was asked this question about an hour ago. What do you think the range is between now and the August WASDE? It's probably $4 to 450. I don't, we're kind of here in the middle. I don't really see any dramatic reason for us to trade below $4. So we'll see. We traded down to 412 today, but we won't get the commitment of traders report. Let's see, 4th of July, Thursday. So we won't get it until a week from Monday. It's a long time to wait to analyze the position of the funds. But I will say this, Joe, is that the funds that I talk to, they're not necessarily bearish from a fundamental standpoint. Sure, they don't like corn demand. They don't like the fact we don't have any new crop beans sold to China. They don't like those numbers. And they're certainly not bullish, so to speak, on production issues. But they don't really have a fundamental outlook. But as I said, it's the path of least resistance. And until they're proven wrong, they'll keep going in here. We'll see what open interest does on Monday. For D's corn especially, I don't think there's going to be much change in November beans, but we traded a lot of corn today on this break. So we'll see what happens.
Well, I really appreciate your perspective here, Pete. I mean, is there any kind of shimmer of light? I mean, do we have anything to look forward to here other than possibly spurring some more demand by these lower prices?
Well, that's what we hope for, right? I mean, we hope that, God forbid Mexico has a good corn crop. We're hoping for some buying come from Mexico, certainly China. We've become the place of last resort, so to speak, or the seller of last resort, I should say. I mean, they're kind of in bed with Brazil at this point. Yeah, Brazil didn't have a great crop, but they seem to be making do with what they want. I mean, if maybe China has a bad year and they have to import some corn, and our corn becomes cheaper than Brazil. Ethanol demand is okay. Feed demand, that's tough to estimate. And I mean, the USDA always admits, or the World Board, I should say, admits that they back into their feed demand just because it's an impossible task to kind of figure it out. We do have, as you know, I mean, with cattle prices this high, we do have a very small cattle herd, so that's obviously not going to help feed demand. But maybe we get an uptick there from other proteins. Ethanol demand is okay. When we look at gas prices, they're relatively low. I'm trying to see where the RBOB was today, $2, and let's call it $2.50. So that for most of the country would put it with an average tax of 65 cents a gallon, like $3.15 a gallon. So those, maybe as we get to 4th of July, we'll see a pickup in demand there. Maybe we'll get a little bit of a pickup in demand as far as ethanol is concerned then, if we see a pickup in demand in RBOB and gasoline supplies. We've been really kind of positioning ourselves for this 45Z tax credit for sustainable aviation fuel. And I was very disappointed this week to see that Secretary of Agriculture Vilsack said the other day, well, we understand that the guidance we gave on the old tax credit, which was called a 40B as in boy, basically we have found, I'm trying to think exactly how he worded it. We found out that the bundled practices, and by bundled practices, in order to qualify for the 40B, you would have had to have cover crops, less NPK or less synthetic NPK, and also a change in tilling practices. And that was going to be the basis of the 45Z. But what he said was, well, we realized that, we bundled, or the Department of Energy bundled those for 40B, and not all farmers farm like that. I mean, Joe, you know what? The guy just had to walk down the hall at the NASS to see how many acres of cover crops there were. There's only 16 to 18 million acres of cover crops. So how are you going to all of a sudden turn ethanol into sustainable aviation fuel on a large scale basis through your 45Z tax credit and not know that there's only 16 to 18 million acres of cover crops out there?
I will
I mean,
say
it's,
that, the cover crop thing, there is money to be made by trying to get into that cover crop stuff. And with prices the way they are, I mean, we're all going to be looking for different ways
right.
to jump on to some of these practices. And this might be kind of a tailwind for them to, get some more of these practices in place. I know that's happened around here.
Yeah, what we hear is that they have to unbundle it, right? So you don't have to have all three to qualify for 45Z. And 45Z is going to be dependent on your carbon intensity score, your CI score. Well, of course, your CI score, that cover crops do have a big impact there. But the fact that he comes out now and says we were promised, by the way, we were promised this 45Z modeling or more data and more information about how they're going to figure out the 45Z tax credit. We were promised that back in March 15th. Then it was May 15th. Now here we are in July. And now the Secretary of Agriculture, Tom Vilsack, says, yeah, we're going to have a 30-day comment period so you guys can comment on this because we understand that, the bundling isn't going to work for 45Z. I don't know, Joe. It's just frustrating for me because we have, plenty of farmers that we work with that are very excited about the possibility of 45Z. They have really low carbon intensity scores, and we'd like to see them get paid for that. But we don't know what's real and what's real and what's Memorex. If I'm dating myself there, but what's real and what's Memorex until we get the final rules. And now all of a sudden, oh yeah, well we're going to wait 30 days. You guys have 30 days to comment, and then it's going to take another 30 days. And I've said this before. What worries me about this is that the 45Z guidance is going to be the same way that the renewable fuel standard works. In other words, when the EPA releases their renewable fuel standard, a lot of time, like we're in the middle of 2024, to say, oh yeah, well, we're going to release the guidance for 2023. Well, yeah, you should have released that in 2022, so I would have known what the rules are. And what I worry about is that this could be following suit, that we're not going to know the 45Z rules until mid 2025 when the tax credit starts on January 1st of 25. So it's a bit frustrating. It's a bit frustrating for us as a group, and I'm sure it's very frustrating for the farmers as well, especially in this low price environment, which got much lower again today.
Yeah, it can be kind of demoralizing, but we've also been through patches like this before, Pete. I mean, this is capitalism. The market goes up, the market goes down, and when things look the bleakest, a lot of times that's
it has to turn bearish before it turns bullish, Joe. It always has to turn bearish before it turns bullish. But I mean, okay, it's not imminent, and I don't versus eminent. It's not imminent, but the Iowa Public Utilities Board did pass the carbon pipeline this week, right? They said, yeah, Summit can go in and do that. That's a huge jump for ethanol sustainable aviation fuel. I know that they approved eminent domain. That's obviously a terrible thing, especially for farmers to hear. Nobody wants, whether you're a private homeowner of 2 acres or a farmer with 10,000 acres, nobody wants the government to come in and tell you that, yeah, we're going to take this and do this and whatever. But, that's kind of a positive for ethanol demand in the longer term. But again, to your question, it's very hard to find any bullish inputs in the short term here, unless we get a yield drop in August or September. I would probably think it probably won't happen until September. And even then, Joe, this market has proved time and time again that supply rallies need to be sold. Yep. And but we haven't seen a demand rally in quite a while. I mean, so maybe we get to a point where it just becomes too cheap for for end users to avoid, right? Maybe that's it.
So the ending comment here is basically buckle in, and we're just going to have to suck it up and get through this and keep an eye on opportunities. Any kind of supply issues that we have, we need to be ready, have orders in. And
I think that's right. I think you need to keep, as much as we poo-poo export demand, when you get the prices like this, you have to start paying attention to the export demand. And what I'm telling you there is that it's not necessarily that we're going to rally. You know, it's not that they're going to buy $4 corn and then all of a sudden, well, we bought $4 corn, we're going to buy 4.25 corn or 4.50 corn. But what it does show is it shows where the end user is willing to engage. And at that point, it kind of creates the low. So if you see that, you're going to see that, you know, there's not going to be a lot of panic. But yeah, I don't, we'll see. We'll see how next week comes about. I mean, certainly the weather seems to be benign at the moment. Usually we go into 4th of July weekend and everybody has some weather concerns. And this year it's kind of like, meh, weather just hasn't been a factor. So, yeah, I'm hoping that hoping this is it for the volatility and we stable out here. Like I said earlier, I think 4 to 4.5 is probably our range until September.
Mhm.
But I hope that I'm wrong. I'm hope that buyers come out of the woodwork, and whether it's ethanol or exports or anything, and that I get proven wrong.
Yep, it's always darkest before the dawn.
That's right.
Yep. Well, thanks, Pete. I do appreciate all your input and taking time to visit with me today, and thanks everybody for listening.